I'm going to play a little game of trade and fade with you right now. Firstly, you've got Woodside as a trade, especially after what we're seeing today, the brutality. Do you still think they're a buy?
Absolutely. We're buying some this morning. Amongst the energy stocks, it's the most conservative position. It had the lowest production costs at $8.50 a barrel of oil. Obviously exposed to that falling Aussie dollar. Lowest gearing at 7%. And the key thing is it has a lot more growth than a lot of the other energy stocks, particularly Santos. You mentioned Santos's Barossa project that's being knocked off. Woodside are in a fortunate position. They acquired all these wonderful assets from BHP as a result of a bit of greenwashing. And so having a lot of the internally generated cash to grow over the next sort of couple of years. Critically, one of the reasons why we like Woodside over some of the other domestic energy producers is that it's not exposed to the East Coast gas market. You may be aware there's been lots of moves to political meddling in that, looking to reserve gas into the East Coast. Remember, Woodside's projects are predominantly off the coast of West Australia, exported up north, up into North Asia. A lot of the East Coast gas guys from Santos and Origin, they're facing moves to reserve some of their export gas and pump it into the gas markets in Victoria and New South Wales, being sold at a discounted price. You want to be avoiding companies, particularly the energy space, that are exposed to that political issues.
We'll play the game in a little bit of a different way than we normally do, Hugh. So we'll do it on a sectoral basis. So you like Woodside as the trade, but you're fading Origin. They've had a raft of issues over the course of the last year and a half or so. But you don't think that even after all those issues, considering that the beating that they took, that this could be tasty for investors looking to get in at the depressed levels?
Ultimately, Woodside's Origin is a much more complicated beast. Unlike Woodside's very simple. They take the gas out of the ground and ship it in trains to Asia. Origin has got lots of retailing of gas and electricity domestically. They generate power via electricity and coal, as well as owning a share in the AP LNG. It's a much more complicated beast. It's a little less cleaning. So what we've seen there, Origin shareholders are well aware of just continual meddling in the energy markets by the politicians, often through, in our view, politically generated issues, in that if they're stopping exploration projects, stopping fracking in Victoria and New South Wales, but it's okay to frack in Queensland, and the politicians wondering why there's a gas shortage in New South Wales. Also, Origin's facing things like energy caps. It's much more sort of, I think you want as an investor, whilst it's been pain, there's likely to be continued pain. I think all I've seen in the last sort of 10 to 15 years is continual political meddling in the markets. I want a clean exposure, selling that gas offshore, and no issues with potentially breaking long-term contracts with Asian utilities in order to sort of service the domestic gas market. Not a good position to be in.